it's similar concept as in how you evaluate an asset. There are different ways to value it. And I would say from a tax office perspective, it's really up to the director of the company how they justify the value, right? So there are different ways of doing it. I give you an example. Let's say something that we can more easily relate to. Let's say a property. So let's say I have a property, I have an apartment here, and say, okay, I need to think about how much it is, now worth. So I can do a couple of ways to think about that approach. That I can look at like, okay, whether there are like other similar properties trading around the corner. So I say, okay, yeah, just last month there's a one just trade similar size, similar facing, so it's 5 million, so it's 5 million. I go 5. But what if there's no trading for the last 3 years? Okay, so I will think about, hey, look, what about I using an example as in like if I want to construct something like this, what would be the cost for that? So there are different ways trying to come up with valuation, and then you need to have the auditor to agree this is the a good approach to do the valuation, and then that would be able to demonstrate to the tax office this is how much it's worth. Yes, if it's more liquid, there's an open market, it's much more easy to get the numbers. I give you another example. Let's say you're trading shares, the HSBC shares. Then you can easily find the value of HSBC shares just looking at the Bloomberg. You can find it. But what about if I invest into a private company, a startup? Then I need to do my reports. Then how much does this startup worth? Well, so again, you go through a different sort of financial model, comparable, and then you come up with the numbers and say, hey, look, I'm as a director, I've done my duty to work out this is, I think, it's fair, and that's how we report it. So I would say valuation is art and science. You have to make the judgment. It's a judgment call.